Hello everybody, it's me, the Mind Injector. In this video I am going to tell you 2 stocks to buy in a recession. These stocks are still great buys in case there's a downturn soon. Fears about a possible recession are growing as interest rates rise and inflation keeps raging. While the economy has been performing well, investors wonder if a downturn could be on the horizon. One way to recession-proof your portfolio is to look at outperforming stocks in the Great Recession, which took place from December 2007 to June 2009. These 2 stocks not only beat the S&P 500 during that time, but also generated double-digit returns. And while plenty has changed since then, these 2 stocks could continue to be good buys if the economy slips into a recession again. Number 1 on the list is Vertex Pharmaceuticals. Vertex Pharmaceuticals was an unprofitable business a decade ago, and its net losses in 2008 and 2009 totaled more than $1 billion. Today, the healthcare company easily posts profits, and its net margin last year was 31%. It's also generating tons of money, with free cash flow topping more than $2 billion for 2 straight years, and it carries no long-term debt. Those characteristics highlight Vertex's stability, even if interest rates rise. The stock could be one of the safest places for investors' money amid a downturn. Its financials could help it generate sales growth without resorting to dilution in order to raise money for new opportunities. Speaking of new initiatives, its gene editing therapy, CTX1, is a multi-billion-dollar opportunity that aims to treat sickle cell disease and beta thalassemia. Not only would the treatment drive Vertex's financials, but it would diversify the company beyond cystic fibrosis, which is its core business. Long-term growth prospects coupled with excellent financials could make Vertex a hot buy despite a downturn. Number 2 on the list is Ross Stores. Ross Stores runs more than 1,950 discount stores under 2 brands, Ross Dress for Less and DD's Discounts. That's almost double the 1,055 stores it operated in January 2011. The business has a history of doing well when consumers are cash-strapped and looking for ways to save money. Not only did Ross generate strong growth in fiscal 2008 while the recession was in full force, but it became a big benefactor once it ended, with sales continuing to rally afterward. The company is still growing today, with sales this past fiscal year reaching $18.9 billion, and the company's net profit coming in at $1.7 billion. And with Ross planning to grow by 100 stores this fiscal year, it will be able to reach more consumers and keep creating long-term value. Ross has consistently reported free cash flow of more than $1 billion in each of its past 5 fiscal years, and has notched a profit during that time, with a net margin that's typically at least 9% of revenue. The discount retailer also pays a modest dividend yield of 1.2%, which is only slightly below the S&P 500 average of around 1.4%. For conservative investors, this can be an ideal stock to invest in if you are worried about recession. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like and leave a comment down below.